Hello everyone and welcome back to my channel SN Study Station. So in the previous two sessions we have seen what is financial management, how does it work, what are its objectives, who are finance managers, what are their functions, roles, responsibilities. This all topics have been covered in the previous two sessions. Now in this video we are going to see the interface of financial management with other areas. In order to know its importance, why it is so important, we have to link it with other areas also. We have to see what is its scope in other areas, how it is connected to other disciplines that we have to see. So for that we will learn about that. We'll discuss those things. So let's move forward and see its relationship with other disciplines. Okay, financial management its relationship with the other disciplines like financial management with economics, how it can be related to economics. Now you all have known what is financial management. It is the management of inflow and outflow of funds within any organization, and finance means something associated with money, related with money. Okay, that is finance. So how money is related to, if commonly we have to say, we can say that how money is related to other disciplines, because if money is there, it has to be managed also, then their financial management comes in. So economics, whenever we have to take investment decision, which option is better, which option is less good to invest in, that all we have to see. Money value, whenever we have to find out the value of money, what is its value in current, in previous times, in the future, what will be its value. That for that purpose we will use financial management. And for finding EOQ, economic order quantity, also we have to use finance. Okay, that all things we have to use. So for that purpose it is important. So that's why it is linked to economics. Okay, for all these things we have to see. Other than these things also, there can be various other uses of FM, various other relationship of FM with economics. Okay, you may have studied the concepts of economics also, so you know where the money comes in. Now FM with accounting. In accounting we have to prepare balance sheet, we have to prepare profit loss account, everything we have to prepare. All the accounting records we have to prepare daily. On daily basis we will prepare accounts, and at the end of the financial year all those accounts will be audited. Okay, financial year is from 1st April to 31st March. So by the end of 31st March all those things will be audited, all those accounts must have to be prepared and it will be audited. That is accounting. So accounting is the base of financial management also, because earlier financial management was not a separate subject, only accounting was there. So FM is also a part of accounting. It has come from accounting. Whenever we have to prepare certain things, like suppose we want to know profit of any organization, we want to know the capital of any organization. For that again we will need financial management. For decision making, on the basis of that we will be able to make decisions. Suppose this year we have suffered loss, so how we can recover it in the next year, how we can recover from that loss, that decisions can be taken. So that's why it is linked with accounting. Basically it comes under accounting. Now production management, whenever we have to prepare goods, suppose you have a business of manufacturing business or production business, you produce some goods or services. Okay, so suppose you prepare mobile phones. Okay, you have a business in which you prepare mobile phones. So for preparing that mobile phone we need raw materials, we need its parts. All those parts have to be collected, that we have to purchase from the suppliers. Cost and everything has to be seen. Cost, again finance will come, money will come. So after purchasing also, that those all things have to be assembled. Who will assemble it? Who will create that mobile phone? Who will make that product? Labors will be required, machines will be required, and all these things will be requiring money. And we have to give something to labors also. Okay, day-to-day expenses will be there. All these things we have to see. So that's why it is linked to production management. Now, HR, human resource. Like if we have kept persons, if we have kept employees in our organization, suppose we need employees for our organization who can work for my organization, who can work for my business, who can help me with that. So if they will work for me, I also have to give something to them. Okay, I have to give them salary. If they are laborers, I have to give them wages, commission if they will do extra work, bonus will be there. Okay, whatever requirements will be there in the form of money, I have to give them, and that's where financial management comes in. Marketing also. Marketing is the process of taking the products, taking the finished products and making it reach to the customers. Okay, we have to make the products reach to the customers. So for that also, okay, suppose we have product is available in my business, in my shop, the product is available. How will the customers get to know about that product? That this is the product which has launched, which is newly launched, okay, or this is the product with new features. How will they get to know? We have to do advertisement, and for that we have to spend money. That's where marketing comes in. And for packaging, there are various other things also, because we have to present it to the customers, so that has to be attractive. Now we'll see individually few points also we will see. So interface with market, FM interface with marketing, how it can be related to marketing, what is its interface with that. So we have to allocate funds. Okay, suppose first we have to decide what is the planning we want to do. First we have to decide according to that what we wanted to do. What are the marketing initiatives, what are the advertisements that we wanted to do. There we will invest. Then budgeting is there. Okay, then we'll decide that this is the investment amount which we require. Now from where that amount will come, for that we have to prepare the budget. Okay, from this sources we'll collect. Now revenue generation will be there, means we will generate income through that action. Okay, first investment, we'll invest in a, suppose I have invested in advertisement of my product, that investment is done. Now budgeting I will do. Okay, budget I will prepare. Budget, in budget what is mentioned? Income and expenditure is mentioned. So first I'll write the expenses there, what was the amount that was spent in marketing, that was spent in advertisement, and according to that I'll prepare how I will get the revenue from that, how much is the expected revenue that we can get from that. Then analysis is to be done. What is the performance? Has our marketing been successful or not? Then forecasting, according to that, according to the analysis, we'll forecast for the future. And then strategy, again we'll make long-term plans. Okay, all these things has to be done. So this was the interface with the marketing. Now HR and finance. In human resource means people, employees who will work for my business. So for that, first I will prepare budget. If I need persons who can work for my business, so first I'll prepare budget for that. Okay, what are the HR programs that I need? Okay, first I'll prepare budget. How many persons do I require? I'll prepare everything. Then recruitment will be done. Okay, recruitment will be done. What is the job post? Okay, according to that we'll release vacancies and all. Then after recruiting them, after selecting them for our company, we will give training to them. That will also require money, because we have to train them, otherwise how they will be able to work for our organization, because the organization culture is different everywhere. Okay, then performance, it's not like we will leave it here after their selection, after the selection of employees we will leave it here. No, we have to check their performance, and on a regular basis we have to check it, how they are performing. They should not take it lightly. They should work for the goals of my organization. And then according to that, compensation we have to provide them, then again finance will come. That means money will come here. Okay, now operations. Financial management interface with operations. Okay, for day-to-day activities also we require money. Okay, not just for long term, for short term, for daily requirements also we have to invest money. We need money, we require funds for daily requirements also. So first we have to prepare a strategy, how we are going to do it. Planning has to be done, then budget has to be prepared. Okay, what is the actual money that we require, how we can collect that money from different sources, then that planning has to be executed, and then review. In the last, review will be done whether we have done it right or not, or any other strategy is required. If in the review we'll find out that this is not working, again we'll go for a strategy, new strategy will be prepared. Like this things will be done. There are some legal framework, okay, which is required in financial management. Like there are some regulatory bodies who used to control, because if all these things come in, there should be some rules and regulations. Okay, otherwise people will do what they want to do. Okay, everyone wants to make more and more money, so they can adopt either fair or unfair practices to make money. So for checking all those activities, we have to see SEBI is the one who takes care of all the activities. Securities and Exchange Board of India, it takes care of all the stock exchanges. Nothing should be, fraudulent activities should not be there. RBI governs all banks. It creates various policies time to time to maintain the economy of our country, and there are various other regulators, IRDA and various other regulators are there who used to control things. Now various acts have been made, Companies Act, Income Tax Act, Industry Act. Okay, we have to see according to our organization what is needed. We have to see, we have to read those acts. According to that we have to work. Corporate governance, whatever rules and regulations are there, we have to follow those things. Okay, ethics should be maintained. Now last topic of this session, importance of FM in organizations. Why it is that much important? Now I think you all may have known why it is that much important, because we have seen so many points, so many things. Resource allocation. Okay, whatever resources do we have to invest them in best options. Okay, then risk management. Risk also we have to see which option is more risky, which is not that risky. Okay, we have to analyze it in the long term. Performance, we have to check performance measurement is there. Okay, we can check performance in organizations through financial management. Strategic planning. Okay, planning can be done, long-term planning can be done, because that will be helpful in completing our goals, in fulfilling our objectives. And cash flow management, obviously financial management is it involves the management and arrangement of flow of funds. So cash flow management will be there. Okay, how much cash is coming to the organization in what time period, and how much cash is going outside the organization in which time period, that all we can check it through this. So this is all about today. Thank you so much and keep watching.